Virtually everyone knows that there is money to be made in the stock market, but few people actually know how to do it. Many people recklessly invest their hard-earned money and end up getting no return for their investment. If you would like to know to make prudent investments, then continue on through this article for some helpful investing advice. A long-term plan will maximize your returns on investment. There is a certain amount of inevitable unpredictability to the stock market, so a reasonable plan with realistic goals will keep you focused. Never sell your stocks without giving each one time to generate profits. When you invest money in the stock market, you should be focusing on spreading your investments around. It's better to spread things out than it is to put all of your hopes into one stock. For example, if you've only invested in one stock and it fails, you'll lose everything. After gaining some experience, you might be interested in learning how to short sell. This strategy involves borrowing shares of stock from your broker. Simply put, an investor will borrow shares and enter in contract to deliver an equal amount of shares at a set date in the future. The investor can make use of the loaned shares immediately, and then hopefully reacquire them later at a lower price. Don't overly invest in your company's stock. There are certain additional risks you take on by holding stock in your own company, even if it feels like a vote of confidence on your part. Should something go wrong with the company, you're looking at losing both your portfolio and your paycheck at the same time. Although, if employee shares can be purchased at discount, it might be a good bargain and worth purchasing. Keep your investment strategy simple when you are just beginning. A big mistake beginners make is trying to apply everything they have heard of at once. This will reward you with smaller losses, bigger profits and a solid base of experience. You can sometimes find bargains with stocks that have taken a short-term hit because of bad news. If the bad news is something fixable, that can be a great opportunity to jump on at an attractive price. Just be sure the bad news is only temporary. An example of a situation that causes a temporary downturn in a company's stock value is the panic created by a missed deadline caused by a fixable material shortage. Although, you have to keep in mind that companies which have had prior financial indiscretions have a higher chance of failure and possibly will not recover. After reading this article, you should have more knowledge about the world of investing in the stock market. You need to be prepared when it comes to investing in order to see your money grow. Do not forget that you need to take risks if you want to achieve success. Use everything you know to your advantage and keep learning as you continue to progress. Please check out the link in description to access the best strategies to become successful in the stock market.